I'm Ian Worboys, CEO of P3 Logistic Parks. We're an owner, investor, developer. We have 4.1 million square meters that we own, and we operate across 9 European countries, all the way from Bucharest through to Barcelona. So we cover Central, Eastern and Western Europe. We've had a fantastic year last year. We developed 800,000 square meters. So we've definitely picked up on what Logan was saying, that development has been good and there's been a shortage of supply. We finished the year with 97.4% occupancy, which is pretty amazing because some of the offices we have in some older warehouses are definitely never let. So we almost hit 100% in my mind. But I'm happy to be here with all of you and look forward to your questions.
Great. Rémy.
Hi, good afternoon and welcome to all. I'm Rémy, I'm working for AW. I'm pretty sure you know who AW is. AW is an asset and investment manager specialized in real estate. We manage 30 billion in Europe, 60 billion throughout the globe. I'm the logistics specialist for the firm. Started 15 years ago, involved in a logistics business, and I'm running the platform set by AW for investment in the logistics space, set back in '99. Today, this platform is valued at 3 billion roughly, so slightly more than 4 million square meters. And apart from LOGISTIS, which is the big boat for investing in the sector for AW, we can also do some deals for separate account clients. But logistics is within our blood and since the beginning. So I'm pleased being there as well, explaining the sector.
Great. Pierre-David.
Pierre-David Baylac, I'm from CBRE Global Investor, the branch of CBRE doing investment management. We have more than $100 billion of AUM globally. But what is a bit less known is that in Europe we have 7.7 billion of investment in industrial. Within those 7.7, circa 4 billion are pure logistic. A bit like Rémy, we have been investing in this sector since the very early 2000s, so we have quite an experience. I've personally now 25 years in industrial. That's my 25 anniversary at MIPIM. First was in '93, I remember, and almost 20 in industrial. But I mean, at the time we were talking just about warehouse sheds, even, and now it has become a much more complex asset class.
Extraordinary to have started when you were 7 years old as well, Pierre-David. I think that's something. Logan, just give a bit, because you gave us an overview, but
my name is Logan Smith, and thank you for the introduction earlier, but I am head of logistics at BNP Paribas Real Estate on the advisory side. So we're a services firm. We work with all of these, our clients here, and we have about 154 people working in logistics and industrial, in investment and leasing throughout Europe.
Great. Ian, let's just pick up. I mean, we've heard there from Logan about just the huge changes that there have been in terms of ownership. What I guess are the key changes that you've seen since MIPIM last year, over the past 12 months? Obviously, there have been changes of ownership as well, but what are the big things that you think stand out?
I think if you look back over the last year, everyone was saying, is logistics overpriced? Is it, are yields going to come in further? And Logan at the time said, yep, I think they'll come in further, and they did. And I think in lots of markets, there's still some more yield compression to come. So I think that was one of the big changes from last year that people weren't too sure, but it's happened. Secondly, Logan described exactly all the purchases that took place. We were one of the first out the blocks and were sold for 2.4 billion. And if you add it all up, Logan, it was, how much was the figure? A ridiculous amount that was of money that 30-something billion. And then you look at where that money came from. And again, last year, people were predicting this wave of money coming through from the Far East, and it happened. So it's meant that there's a lot of very healthy competition now in the logistics sector. There's a lot of developers who are well funded, either ourselves through GIC and through the others, who all have access to relatively inexpensive money, which is great for the tenants, because, or our customers, as we call them in P3, because it means that the development market is very competitive. And although we're seeing rents rising in most markets, they're probably rising less quickly than they would if this wave of money hadn't been there to support all the various developers and investors out there. But there's still, there's still opportunity in the market, and I think we'll be sitting here this time next year. Be interested to see what happens in this time next year. I think it'll still be a great market, still be booming, but I think people are starting to think, is it going up too much, or is there going to be a little correction? And I've had, on your 25 years, I'm now 36 years in logistics. And in that time, I've seen 5 recessions, and often there's like a little correction after a big recession. So I think that's what might happen in 2 or 3 years' time.
So you were only 1 when you started. I mean, that's even more extraordinary.
I paid him for that.
I mean, that's an interesting point about how it'll be perceived, because that also plays then into views about where we are in terms of the market. Rémy, what's your view on that? Do you think that investor appetite is going to continue in the same way, and is that based on an idea of that there's still growth in the sector to come, whether that's rental growth or value growth?
Thanks. I was about to talk about rental growth, because that's what we have seen over the past 12 months. And we all said that there is no rental growth in logistics when looking back at rental level over the past 10 or 15 years. You just look at flat lines. But the UK market has demonstrated 9% roughly of rental growth last year, 7 to 9%, and it's even much more important in the US, especially on the West Coast, where on some spots you have plus 30% of rental growth. So rental growth will happen in logistics too. There's no way for logistics to be an exception. There was no rental growth in the past, I guess, because that was a young market, and you need to have an imbalance between supply and demand to create rental growth. If you look today at the sustainability of the take-up and how the take-up is increasing compared to the land bank, there's no way for no observing rental growth. Of course, as you said, Jan, as long as all the investors are happy continuing decreasing the yields, there won't be any rental growth, because you keep the same profit while lowering your rent. So in a competition environment to get the tenant, you do it. But at one point, I'm part of those believing that yield compression will slow down. Land value is increasing everywhere. Construction costs today, I think it's plus 15% compared to last year. So all, I think, the factors are here to create rental growth. So I guess on the top of capital appreciation coming from yield decompression, we also have capital appreciation coming from rental growth. And that's why the investors all over the world are interested with the sector, because they realize that it's anymore an alternative asset class. You can't live without logistics. Everything which is material here was somewhere stored in a warehouse before reaching you, and we can't live without that. I'm not pretending it's the retail of tomorrow, but at least we will take serious market share from the retail sector, and there's a huge lack of square meter in Europe. So naturally, investors who are assessing a market first based on its fundamentals, they see great fundamentals, and that the difference, as you said, Logan, compared to 2007. 2007, we were launching spec as much as we could, and the demand was not there. Today, we launch spec, but the demand is exceeding the pace of our development. So I guess still very positive for the years to come.
And Pierre-David, picking up on that point, is that largely driven, do you think, by the e-commerce boom, or are you seeing that more in terms of just the growth cycle, the economic growth cycle in Europe beginning to pick up? And although that's maybe not so big, bigger obviously in Central and Eastern Europe, is that what's driving this demand? What's at the bottom of that demand growth?
Well, I'm maybe maybe less optimistic than Rémy on rental growth, a bit more cautious, I think. And what we will see is a bit of the same thing that you see in the US, that there will be market that will be, big winners, and market that will probably notice hardly ever. rental growth. So that really deserve a very careful approach on market by market, and probably the main driver will be indeed the supply of land and the ability to procure a brand new building. So probably high rental growth, low rental growth, but overall the blended bet, I think, from investor who came to Europe is that there will be rental growth. I think the e-commerce has been a fantastic driver for the economy, but it also has obliged a number of traditional retailers to rethink about their logistics. Not to say we should not leave the room with the idea that everything in the warehouse is e-commerce. It's a small part. It's still a small part of what is happening in the warehouse. It's evolving, it's shifting, but we are still with a big chunk of what we have in our warehouses is traditional retail. And within the traditional warehouse we often see the omni-channel. So we have plenty of warehouse where we have people that are doing standard logistic that will go to shop, and alongside also developing an e-commerce part, whether it is that they do it in their own warehouse or more they use a third-party provider that they help them with the e-commerce. But that has been a fantastic driver, reorganizing all the supply chain of the different players in Europe, definitely.
And Logan, in terms of, in terms of yields, what's been interesting before is that when the economy was going down and after 2008, you'd got real issues with the economy. Actually, logistics began to perform well and was almost operating in a way that it shouldn't have been. It was against what you would expect from the fundamentals. Obviously, we're in a cycle. All real estate has cycles, but do you think logistics kind of stands above that? And do you think that means that yields will continue to come down further, irrespective of what may happen with office or with the other sectors?
It's a good question. I guess the first part of the answer is I would never say that it somehow stands above the cycle. That would be imprudent, perhaps. But I do think that there will be a relative outperformance of logistics relative to other sectors. So let's say interest rates go up by 300 basis points, I don't know. I would wager that logistics will perform better, perhaps, than other asset classes. In many ways, because of what Pierre-David and what we've been talking about with technology. One important point that I think is often lost in these conversations is the impact of e-commerce. The impact of technology is not something that just showed up 2 years ago once everyone decided that Amazon, needed more space. Technology has been fundamental to the growth of this industry since its inception. You look at where the first wave of warehouses were and why they were there. These were the 20,000 square meter buildings built in the late 90s, the early noughts. Why? Because retailers, because manufacturers wanted to consolidate their individual warehouses. Said, we have EDI, electronic data interchange. This is 20 years ago, right? This is well before everyone had Amazon Prime. And they said, wait a minute, this is the first time that the customers could consolidate the view of inventory and orders into a single system. And all of a sudden, a bigger warehouse in a more central location made sense. And companies like Prologis and A&B rode the wave of this to their business models. So that was effectively the predecessor, the precursor of e-commerce, of retail e-commerce. So e-commerce has always been with this sector. It's always been a driver of the sector. All we're talking about now, when we look at these 3-story Amazon facilities, is what it looks like today. It gets really interesting when you think about what it looks like 10 years from now. Where will it be? How do you invest money into real estate to secure title to the space there where goods are going to be flowing through? It's very difficult to say with any certainty, but I think generally you can make a couple of pretty safe bets. Locations closer to populations are better than ones that are not, and locations that are closer to motorway junctions are better than ones that are not. So it becomes a little bit of a demographic play a bit, but I think that to to your question, for sure, logistics will outperform. If, number one, the two reasons for that is, firstly, we still see demand. And secondly, frankly, there's still a lot of money looking to get into this space. It's really that simple. From a lot of different areas, a lot of money is coming out of other sectors, out of other classes going into this. And until that changes, prices aren't going anywhere.
And what we could add, Logan, is that the risk premium, when you compare prime logistics, prime retail, prime office, will continue to decrease, and that will act as a buffer when yields will come up again, because there's no way for logistics to be out of the cycles. So I guess with the asset class becoming more and more mature, now we have no problem of liquidity because all investors want to have a logistics exposure. So I think the reality of this risk premium will continue to decrease. All over Europe, roughly it's 150 bips, I would say, prime logistics against prime retail, prime office. And is it justified? For example, you're within Hamburg Harbor, you will be constantly let forever, zero capex. Why would you apply a premium against retail or office if you're constantly let without capex?
Yep, it's an interesting point. I wanted to just pick up with you, Ian, on the technology side that Logan just mentioned, because so P3 has a conference in each year focused on the logistics side, and I was there this year for the first time, which was looking a lot at some of these areas of future technology, artificial intelligence, robotics, what these kinds of things meant. What I wanted to do is just get your sense of some of the bigger trends that you felt came out of that conference, the things that you felt would have a direct implication or influence on this sector.
I think we've been doing this for a few years now. We've had 4 of these conferences, and we get experts in from all other areas to see how the building of the future, the warehouse of the future will be, and also to see what will happen within the warehouse, not only from sort of robots, but what will happen to the staff. And I think that the biggest, the frightening thing that I found out, I think it was last year, was the first time it really hit me, was how many jobs in logistics are going to be taken over by automation. Whether it's automated chariots in French, forklifts in English, sorry, I forgot the word, forklifts, whether it'll be people packing, et cetera, et cetera, et cetera. At the moment, Amazon have robots that bring the goods on trolleys to the people to pick, because at the moment robots can't pack as fast as humans. But that's really, that's probably a year or so away before they can. And we had a guy called Sean Curley speak with us, and he was taking us through all the things where I'd have thought, robots could not replace humans. And it went from everything from picking apples to rounding up sheep to security in Russia, where they already have some that'll kill people. And it went through all of this. And I think as humans, it's quite interesting for the future. And for the future warehouse, there'll be less and less people in them. You'll still need some people, obviously, to look after the systems, etc. But a lot of what are now basic drivers, drivers like lorry drivers, in the same way, get an Uber in 3 years' time, there won't be a driver in it. And so there's going to be great problems, I think, in the world with the lack of employment, whereas with availability of employment. At the moment, there is a lack of availability in warehouses. And so we're finding people having to take warehouses in places that, as Logan said, they're not quite on motorway junctions, but they're in areas where there are labour is available. And that's going to be a big change as we look forward to that. Apart from that, we've looked at things like the energy use. If all lorries are going to be electric and going to have to be charged as they load in the warehouses, how do we change the power systems? People's cars. We at P3, we already have large areas which have electric cars parked in them. So we've already been putting that in for a while. And many other little things that'll change, from photovoltaic panels, the way they actually operate, water collecting. They've been around, but they've got much better and better as we go forward. So I think the future for warehouses in every respect is great, but they are going to change, and what happens in them will change.
And I thought it was interesting, actually, one of the things, picking up that artificial intelligence robotics side, which was that, yes, the packing at the moment is slower, but once you've actually established what the robot needs to do, then what you're looking at is software upgrades. So once you've got it in place, then you can do that much, much quicker. So there was an example there of something where it took a human 3 minutes to do it, and the first time it took a robot was 6 minutes, so it didn't seem like a useful thing. But then after 3 software upgrades, it was doing it in a minute rather than 3 minutes. So big changes there, I think. I mean, Rémy, it'd be interesting to pick up from you. Are you taking into your investment ideas and strategy some of these potential changes, like, for example, if you begin to get electric lorries, which will come in, and potentially driverless electric lorries, which potentially changes entirely where you need to have logistics because you're no longer based on European driving times. You're then more based on how long the charge will last. Will that make some locations redundant? What's your feeling of that? How do you take that on board?
I think I have, if I may say so, an old school view of real estate, and good rules will remain good rules, even with other technologies. So as Logan said, you need to be close to the people because you need labor. Even with robotics, you will need it. You will need to serve the people, and you need an efficient access to motorways to spread your goods around the city which is closest to your warehouse. So I think this will remain true for the future, and I guess in the way we build the layout and the concept of our warehouse, it's easy to adapt them going forward. We do not overbuild. When you buy a land, you develop a logistics asset, your coverage ratio is roughly 50%. You have parking spaces, so you have many things on which then after you can invest and bring flexibility and continue to adapt your asset to the newest technology. The obsolescence to which you cannot fight is location. You will take any asset manager you want. If your location is bad, your location is bad. But based on a good location, you can adapt your asset. So I guess the rules, at least for me, will remain the same.
And for you, Pierre-David, in terms of, let's look at locations. Do you think the urban inner city logistics is going to be one of the biggest changes, let's say between now, we're looking at outlook for 2020. Do you think that's going to be the major growth area?
I think that's a challenge because we are with logistic with an asset that's very well identified. We all know how to define what is a grade A asset. That's probably the most easy asset class to define. Not to say that they're very good, you can define that easily. But when it comes to urban logistic, that's much more difficult because there's not a single type. There's several type of assets that we call urban, and we all looking for this type of buildings. So what is difficult today with this type of assets is that generally you need the authority to provide you with the land. It's extremely difficult to get private land or private assets when you can do this type of urban logistics. The demand is huge, and probably there is a lot of potential. I can hardly say rental growth because to speak about growth, you have to have a starting point where we currently really don't have. We don't know exactly what is exactly the rent of a urban logistic. In Asia, they have a number of assets that probably now making that identify. It's much more difficult in Europe. It's for us to invent this type of asset. As we speaking today, we are still with the idea of developing assets that are not really in the city but still outside of the city to bring the goods inside of the city. But it's not an asset that really exists or is standardized yet.
Okay, good. I mean, and that you mentioned there Asia, and Logan, in terms of let's say the US, Asia. Where is Europe at the moment within that? Do you think we're driving certain areas, or for example Tokyo, where you've got logistics that are multi-story logistics? What's your sense of where Europe is?
Yeah, I mean, I think for sure Asia has been on the vanguard in terms of the big multi-story facilities. We're already seeing these in the US, but I think though Europe has a little bit of a head start in some areas. I think specifically look at Paris, where there are a lot of very thoughtful public-private partnerships, alliances in terms of repositioning and how to use barge freight, et cetera, and some really creative uses that I think could provide some templates that we haven't seen yet. I mean, do you remember 5 years ago it was all about rail, and is the facility rail served or not, and it was all going to be rail, and no one's really talking about that so much anymore. It's more about, well, wait a minute, hang on, Amazon, for example, is doing pilot projects in the US where they will rent consumers, their customers, garages, so the carport of their own house to store goods in. Now that's last mile, and in some sense that would compete on some level with warehouses. But it's very difficult for us as real estate investors to get access to that. You look at the pilot projects with Audi is doing in Europe where they do effectively the same thing with the boots of people's cars. Aren't those warehouses too? And so all of this comes into question, and we are a bit limited, right? From our standpoint, we're real estate investors. This is what we do. We look for the real estate access point to these business models, but there may be other ones out there. The changes in supply chain and technology are going to be so profound that it is going to call all of this into question. I think we're starting with the right place, and I think the silver lining to this is within the logistics sector, at least we're talking about it, because these changes are going to be just as profound for the office sector as well, as retail, as multifamily, pretty much everything, if you imagine what a world looks like where these technologies are really fully employed to their highest capability. So I think for sure we're headed down this path. It's going to become much more fluid. Look to an ever-increasing common view of inventory and order information, and look to kind of it to fill up available space as needed. If that happens to be a real estate investment asset that you can develop and it's got an Amazon logo on the outside, fantastic. But there's no guarantee that that's going to be the case.
Ian, you wanted to pick that up?
Yeah, I think we're obviously we're a developer as well as an investor. My colleagues here are investors, and so we actually have started something called P3 Urban Logistics, where we're actually in the process of buying sites around Europe for that last mile delivery, so that we can give some of the bigger retailers a vertical service, either big boxes right down to the last mile. And so we've spent about the last year and a half researching before we started buying sites. And I think it's going to be quite a big change to the market. I think it will. I agree with Pierre-David. It's going to become almost its own sector because it is so important to the retailers to be able to get those goods to you. I personally, I don't understand why someone runs out of coffee and needs it within an hour. I mean, you were running out yesterday. Why didn't you think about buying it on the way home? But hey, people want things straight away. And in fact, it's got to the stage where, nice little anecdote, my marketing director was telling me about someone whose 5-year-old was on the computer. And he said, it was 7 years old, so it was on the computer. And his dad said to him, "What are you doing?" He said, "I'm just ordering something on Amazon." And he was very impressed that his 7-year-old was actually ordering it. And he put the computer down and ran to the front door. And his dad said, "Why?" He said, "Well, I thought it'd be delivered now." True story. And that's what sort of some of these primes, Amazon Prime and others, want to get to. And that means you need the delivery stores, the last mile warehouses, urban logistics in the right place that have the right number of doors for big lorries one side, for all the vans maybe on the other 3 sides, and where you have parking for the vans, you have charging facilities, because future urban logistics will all be electric. There won't be any vehicles that aren't electric. And people will be able to get their goods. We worked out, it was in Berlin, we looked at a study that with 4 urban logistic warehouses, you could get everyone in Berlin within half an hour. So we actually did the work on it to look at it. The problem you then have is trying to find sites when you're competing with, especially residential. So unless there's going to be a huge price for an urban logistics, which we think there could well be, then that'll be a stopper to it. But so far we've found some good sites, and most of them will be brownfield sites. So it's an exciting future. This time next year, watch this space.
Or potentially, you should be buying up car parks. If we believe in driverless cars, then car parks sounds like a good...
Yeah, I mean, again, already people are saying that most people's cars sit, I think it's 80%. I think, Logan, we had this chat before, 80% of the time or 90% it doesn't do anything. So if you can come up with some sort of car sharing that really works, driverless cars, then certainly there'll be a lot of things you could do.
Let's dig down a little bit into the investment side and the opportunities that there are looking towards 2020, so over the next 2 years. Pierre-David, do you see that there's more opportunities in some parts of Europe than another? For example, we have the new Silk Road from China coming across. You've got that coming through Piraeus as a port and up through Europe that way, or you've got it as rail coming across Central and Eastern Europe and ending up in Rotterdam. Are there particular geographies, locations, cities that you think are going to outperform?
Well, I think a bit like Rémy. I'm also a bit old school, and I do believe that the good location will be the best investment. Staying in the large population center for us remains the main driver. Of course, we assume with the XL and XXL demand increasing, a number of platforms that are developed a bit outside of the key hubs or the large population center. That's probably where we're not going. We remain focused or on the large or on the main hubs that can provide land for this XL and XXL, but all established location. Otherwise, I prefer investment remains on the large population center. Not necessarily with really places where we don't want to be, but we have, of course, and that's the basic of the business, a preference for where there's a scarcity of land, because that's what has the most potential for growth, or even for a defensive strategy. But cities like Barcelona, for example, if you can find land, that remains a fantastic place to be despite politics. So it's really on a micro location that you also must look at that.
Okay, good. Rémy, did you want to pick that point up?
Well, no, just talking about my love for Italy. I personally very much like this country, and I think it's highly underestimated from an investment point of view. And because of that, because of lack of debt in Italy historically, because also of lack of development capital, I guess, Jan, you know that market quite well as well. I mean, I think, honestly, it's a market let at 99%, not my portfolio, the entire Italian logistics market. I don't know any vacant space, and I can tell you there's strong industry in Italy and also strong consumption. So that's really a market which will be in demand for further square meter. I think the same for Spain, but I think we are not talking enough about Italy.
Okay.
I agree.
And in terms of the locations, Logan, what's your view? Let's also pick up Brexit questions. Does that mean that people should or shouldn't be looking at the UK? Will that make any difference?
I mean, from Brexit, the market didn't miss a beat from Brexit. The interest in the UK was just as strong 24 hours after Brexit was announced as it is now. I think for me, what's surprising a little bit from the UK is actually the strength of manufacturing demand within the sector. It's very counterintuitive because you would think the opposite, but in fact we have seen quite a bit, our UK team has, over the past 12 months. And to the BRI, to the Belt and Road Initiative, I think for sure there will be an impact with this, but I wouldn't look for I wouldn't try to micromanage which market. I mean, I think part of the impact of the Belt and Road Initiative is the fact that you have enormous amounts of Asian capital already targeting the sector. And that's really the first step. It's going to be a 20, 30-year time horizon we're talking about.
And Ian, I mean, obviously, we heard from Logan just the variety of capital. Are you also seeing just more new sources of capital coming into the sector, newer operators? What's your sense of it?
Two things there. One is the sort of capital coming in. Obviously, for us, we're no longer searching for capital because we have a very strong shareholder. But I think there is a huge amount of money that will support logistic development. And you've seen, the second part of your question was the providers. There are some quite small companies who have managed to grow quite quickly because they're able to find a source of capital, which if I go back to 2008, 9, we were running around trying to find people to actually lend us some money in any shape or form, and anyone to come in. And it was only when TPG bought us from our capita that we were able to start our growth that's seen us grow so much to now. But I think while there's still all this money around, there's the biggest driver is the lack of availability. And there'd be more people starting doing logistics if they could get hold of land and if they could then develop it. Thankfully, it's not that easy.
Okay, good. And just one thing for all of you, really, which is in terms of the risk analysis, because we've been having these very positive discussions about logistics as a sector, which have all actually come true over that period of time. Do you see a risk, though, in terms of the interest rates? Because a lot of the attraction of logistics, often discussed anyway, attraction of logistics, was it had bond-like qualities in terms of being able to deliver income. So it was a similar product in a way. Do you think rise in interest rates could then have an impact on it? That's for anybody, really.
Well, I think up to a certain amount of raise that will not hit the real estate market at the whole, because we have already a spread which is higher than the historical average, all asset classes combined. But when interest rate will raise high enough to lower this spread between real estate and fixed income, then obviously the yields will go up for real estate. But I guess there will be a buffer. And as you said, Logan, logistics might outperform because the risk premium against other asset classes might act as a buffer with the maturity of the asset class. So I guess, yes, yields will go up with interest rates coming up, but on a slower pace compared to other asset classes, I guess.
Okay, good. We're towards the end of our time, but does anybody have a question they want to ask? Otherwise, I've got my last one, which I will ask. Right, you get it first, Ian. Which is, so deliberately questioned as 2020. So we've got a 2-year window on that. What do you see as either the biggest trend or the biggest opportunity in the sector for people?
I think we're going to see a lot more demand for Central Europe. It's already picked up in Poland, Czech Republic, Slovakia, and I think that's moving. Hungary and Romania, which were countries a lot of investors didn't look at, people now understand and realise they're pretty stable, and that the risk reward for going to those countries is quite good, because you're still getting a DHL, a Carrefour, exactly the same tenant you have in the West with the same guarantees. It's just the liquidity in that market may not be quite as high as some people want. But most European nations now are much more honest. So I think some of the scares that we've seen in Central Europe have not evolved as people thought they would. So I think we'll see that. I think for 2020, I think we'll be sitting here, the four of us, and we'll have big smiles on our face.
Well, I look forward to that. Rémy?
Well, I'm always smiling, so... I'm afraid I'll continue with rental growth. Of course, as you said, it will be patchy. So for the established location, I have no doubt. And if you don't have scarcity of land, then there's no rental growth. But I guess for the average, the market will see rental growth. And that will be the first time for us in continental Europe, since logistics is an asset class.
Great. Pierre-David?
One of the things I think should happen is more and more speculative building. That's already started, I think. If you look at the US, 75% of the completion of warehouse last year was speculative building. They're extremely successful in the letting, but a lot of operators, they have climbed up the risk curve. That probably will happen when we have abundant money. So I think that's going to be something we will see more and more in the coming 2 years.
And finally, Logan.
I think we'll still be talking about technology. I think we will have seen some rental growth. And I think we'll still be talking about where the best locations are and what that means. But I do think we'll all have smiles on our faces. And like Rémy said, I know I will, no matter what the outcome.
But in the meantime, if you could join me in thanking the speakers, that would be great. Thank you.